there's, a decent amount of overlap between like, CPAs and tax attorneys, but an attorney, generally is going to consult, like if you have like tax issues or tax questions, like around like tax law. The attorney is more of like tax planning. The CPA is somebody who's going to keep your records, file your tax returns, stuff like that, make sure your tax return is filed correctly. I've heard somebody say like you should put your kids on payroll. Don't do that. Like if they're not doing anything for your business. I think one other thing to think about in terms of like health insurance, and taxes is, a health savings account, HSA. If you're a W-2 employee and your employer offers one, like definitely take advantage of it because it's, it's triple tax advantage.
All right. Welcome back to another episode of the Investing RM podcast. Today we have Sam. He is a tax attorney and he's going to talk to us about some ways to save money and some legal tax stuff. Obviously, I'm sure he's going to say this multiple times, but this is not official advice from anybody. Get your own advice or get your own professional. But anyway, yeah, thanks for coming on today, Sam, and giving us some of your time to help our audience out.
Yeah, thanks for having me, Josh, and thanks for that little caveat. Again, yeah, don't take it as legal advice.
Yeah.
Yeah. Well, and I think
gotta cover my bases.
No, I'm just kidding.
Oh, for sure. Yeah. I was going to say too, I think it's like we've been going at this for a little over a year. So this will be a good opportunity for people to see whether or not we've just been talking nonsense for the last year.
Yeah. So I did a terrible intro. He's an actual attorney. He's a tax attorney. He graduated from UW-Madison. What else? We went to the same college. We know each other from church. What? Yep. Yeah. So there's the rest of the intro that I
think
missed.
that covers it. That's most of my life.
and even though he's not in the medical field specifically, you can't see this if you're just listening, but he's wearing a Stanford Healthcare sweater because what's your tie to that?
My girlfriend is a pediatric nurse practitioner at the Stanford Children's Hospital, so I get a lot of healthcare stories all the time.
Yeah, and there we are. We're back.
We're back. That's how it ties in.
Yeah. No, but also it'll be great because like I said, I mean, we've been talking about a lot of different strategies over the last year or more that we've been doing this. And we definitely, we do research and ask questions of professionals to a level that we're comfortable with. And again, this is not legal advice, but it helps actually talking to an expert and being able to ask a true expert questions related to some of these areas we've been discussing.
And I know I'd like to think I am one of them, but I am not.
You are not.
I will tell you what I've done and why, but yeah, find somebody who knows what they're talking about.
Yeah.
So I guess one of the first question that we had was, I mean, you have CPAs and you have tax attorneys, and we kind of just want to know what the difference is. I know way back when I remember my parents talking about, somebody hired this tax attorney and they're saving so much more money. So what's the actual difference and why would you want to work with somebody that's an attorney attorney as opposed to a CPA?
Yeah.
Yeah.
Should you have both?
Or both. Yeah.
Both is good, but an attorney, generally is going to consult, like if you have like tax issues or tax questions, like around like tax law. Like, if you're setting up a business and you're like, hey, how do I want to structure this for, tax purposes? Like what's going to be most advantageous for me, single member LLC, S corporation partnership, et cetera, whatever the case is. That's kind of when you would, loop in an attorney. Your attorney's not going to be somebody you call like day to day, be like, hey, like, can you do my taxes? Like that's kind of more, the CPA is somebody who's going to, keep your records, file your tax returns, stuff like that, make sure your tax return is filed correctly. But yeah, the attorney is more of like tax planning. How do I set myself up to, take advantage of loopholes or just certain areas of the tax code that you might not get.
So I've heard people say that CPAs, they follow the law and attorneys interpret the law. Is that something that you tell people also?
I mean, I've never told anybody that, but I think that's pretty fair to say. I think, generally CPAs are a little bit more, rigid, like they're going to, stick to the tax law and, not take as many risks. I think attorneys, we like to get creative, being like interpreting the code, being like, oh, hey, I know it says this, but theoretically this also could work, to fulfill that section of the code. So I think it's, there's, a decent amount of overlap between like, CPAs and tax attorneys, but yeah, like there are some specific, I can't talk, specifics that, apply, like attorneys are going to get versus, your CPA.
Okay. So like potentially your CPA is going to be like, no, this golf trip to TPC Sawgrass is not a business expense. Whereas you might come in and say, hey, yes, it is.
If
Write
he's
it
if he's a
off.
good CPA, he'll say no. Yeah, exactly. Like dude, we can get creative with it for sure. Like even like in work, I've seen a lot of companies running a lot of stuff through as business expenses, and it can get pretty dicey.
Yeah. Whereas most people would call it a gray area. You're pretty comfortable with it because you feel that you can defend these expenses.
Some of them, yeah. Other expenses, it's like your wife's engagement ring. I don't see how that one went through the business, but good luck.
Let's say I go to Wisconsin. I'm visiting Josh in Green Bay, and we go play a round of golf. We're in business together, and you always hear people like casually saying, "Oh, well, you just have to talk a little bit about business. Now it's a business expense." What is the actual legality of that?
So it's again, it goes back to the gray area, like Josh said. Generally, you're pretty okay writing off a lot of stuff. Again, not legal advice, but a lot of the expenses that get written off only come up if you get audited. So if you feel that you could validly defend that in an audit, I think go for it. But also, I think it's one thing to have like a golf trip between like you guys work together, you guys are in business together, like a company meeting, and you couldn't really expense a company meeting versus like if you guys had clients that you guys were taking out to the golf course that like there's probably more of a basis to expense that because you're trying to bring in new business versus you guys are talking business at the golf course, but could you guys talk business over the phone? Like, was that necessary for the business?
It was absolutely necessary.
This is not what we
Well,
wanted to hear right now.
Josh is currently running to amend his past 3 tax returns.
This is true. This is true.
Well, and I think that's something like that I see commonly where you see these people putting all these little small expenses on as a business expense, which I think is probably, I mean, my assumption would be it's probably fine most of the time because it's unless it adds up to some astronomical amount, they're probably not looking at you. But if you did get audited, it's like, is a $50 round of golf worth an audit? It would take a lot more than that, but I think that's what I'm always trying to weigh.
But I think somebody told me once, if you're willing to take the risk, because what's the penalties if they do an audit and then you're like, oh, this is not an actual business expense? It's like 20% or something, right? So $100 round of golf, potentially you might have to pay $20 in a penalty because of that.
Plus the whatever the taxable tax rate would have been that you wrote off. If you wrote off that round of golf, your income goes back up by that number, and you owe tax on whatever you didn't pay on that round of golf. So like say it's 37% for the individual, $37 plus the $20. And then if you extrapolate that, we're talking like, thousands of dollar expenses that you're running through that, it can get expensive. Audits usually aren't cheap.
Yeah. And we're just talking about like a simple round of golf. But I mean, I know people that do this with large expenses in business or in trips and stuff like that they expense for thousands and thousands of dollars. And that's where you're actually going to get eyes on you and everything.
Yeah, exactly. I think like a good general rule is like if it's if you can find a way to relate it to the business, like you're probably pretty safe. But again, like you got to weigh the risk on it. Like generally, just try to expense or deduct things that are business related, like supplies or if you're traveling like a conference or something like that, versus a round of golf with your business partner. Probably not as defensible, but
the traveling one that's a really popular one with the CRNAs because there's a lot of mobile conferences, if you want to call them that, where you can say you're going to this destination. Really, it's just an online a few courses that you have to take, but then you expense the whole trip. That one's really popular with a lot of CRNAs. Some people don't feel comfortable doing it. I've been doing that for a few years. I have not been audited yet either, so we'll see. But I've been doing that for a while.
Yeah, that probably lands in that gray area. I guess it depends on what the IRS is thinking that day.
So that's why I'm hiring Sam to be my attorney.
Yeah, let's
he doesn't know this yet, but he's gonna work for free for me. Just kidding.
Well,
my dream.
Well, I was. So I mean, I guess for us, we have a joint business account. And so like if we were going to play a round of golf, we always put it on that joint business account, through that credit card. So is there, I guess, is there a way to run it through the business but not necessarily. I guess anything you're running through the business is technically offsetting your income, which would reduce your taxable income. So you're saying like potentially don't even run it through the business?
I mean, you can run it through the business. You don't have to deduct everything like that you run through your business account. If you're CPA, that's where they come in. They're going through and itemizing your deductions. They'll see a charge for a round of golf and think, maybe we'll pull that one out of there. Like we won't deduct that. So like your income isn't going to be reduced by whatever that round of golf was. So yeah, you definitely don't have to deduct every, expense you run through the business. There's certainly expenses that don't get deducted, but yeah, so it's discretionary up to a certain point of what, you want to choose to claim on your taxes.
Okay. And what would you say are some of the most common ways that people are probably paying too much taxes or not utilizing these ways to save money on taxes? Yeah,
I think one of the most common ways is just not utilizing like tax, plans like, Roth IRAs or an HSA, health savings account. There are like tools out there that can save you a lot of money on taxes and people just don't know because it can be kind of intimidating to set up, an investment account. And there's so many different options. Now you have a 401k, IRA, Roth IRA. So there's just, so many different options and a lot of them are very different and have, very different tax impacts. So understanding which ones are going to be more advantageous is pretty key in terms of saving money on taxes.
I think something that was interesting for my wife and I specifically when we moved to Northern California from Los Angeles, we were moving from an apartment and we were looking at potentially buying a house, but whatever the cost of living, we were just talking about living in Northern California. The cost of living up here is insane. And particularly where we're at, there's fire insurance on top of that. So it's just our monthly expenses. If we were going to buy a house, we're going to be somewhere between $8,000 and $9,000 versus renting a house. We could rent something for like $3,500 to $5,000 a month for a comparable home. And our CPA advised us, when there's that big a difference in the price difference between renting and owning, he's like, just rent the house and invest that other money. As a, in terms of like ways people are paying too much taxes and investing in real estate to get the tax savings, would you say the same thing to a client that was asking you that same question?
Yeah, I think so. I think it makes a lot of sense, especially in places like that where there's, just so much disparity between, buying versus renting. I think there's definitely ways to, invest that money and kind of make up for, not owning equity in the home. Yeah, you just have to weigh like the pros and cons of, where you are and, what the cost of living is. But I think that's a pretty good strategy, like, especially if it's, make or break for you. Like if you're like, I can't afford to buy a house essentially, or like there's still ways to, take advantage of that money that you're not spending and use it to grow your, your funds, and we can dodge some taxes on the way.
Yeah.
Or you could just not live in California. It's pretty simple strategy.
Nope. It's beautiful. It's going to be, it's like middle of March and it's going to be 80 degrees next week. So I think we'll stay.
We had a 70-degree day not too long ago.
Oh,
But then it was also 25 degrees the next day.
Yeah. Well, that's what we're paying for out here, but I'm okay with it. I think the other thing too, it's like as real estate investors, I feel kind of silly sometimes we're getting on here talking about, investing and all this stuff and we don't own our own home. But now even though we're renting, it makes much more sense. We have more money to invest. And then through our real estate investments, we're still getting those I don't want to say tax evasion because that's not the right word.
Tax advantage.
Tax advantage. Yeah. There
tax
you go.
advantages. Yeah. Without owning our primary residence. And I'm totally good with that. So it's been fine.
So we talked about audits not too long ago. So what does it look like if somebody actually does get audited?
So generally, like if you get audited, it's not usually a huge deal. It's just, some letters from the IRS, a lot of times it's just random, like, you just get randomly selected for an audit, letters, a little bit of correspondence, and generally most audits amount to nothing because, generally people are, paying their taxes correctly. Yeah. If it's not like a huge deal, like the IRS doesn't find that you're actually not reporting like half of your income. Yeah. Generally not a huge deal, just a little bit of back and forth with the IRS, maybe a little bit of, penalties and interest if they find that you didn't pay something correctly. But generally, audits aren't something to be concerned about unless there's like a huge issue.
Unless you're like doing something wrong and they catch you.
Yeah, if you're doing something like really, really wrong, like, evading like, thousands of dollars of taxes each year, like generally you're pretty okay.
Okay. Is that something like they audit you for last year, they find a bunch of stuff and they're like, oh, well, now we're going to go take a look at the last 6 years or whatever?
They can only go back 3 years. The statute of limitations on your income tax returns is 3 years. So right now, like your 23, 22, and 21 returns would be open.
So good for 2020. Thank goodness. No, I'm just kidding.
However, they can like I don't want to get like into the too into the weeds, but there's like certain cases where the statute of limitations can be extended. Like if you agree to it, like I don't know why you would ever agree to extend your own statute of limitations, but I wouldn't. But
Would you advise us not to if you were our attorney?
if I were offering you advice, I would advise you not to. But yeah, but yeah, generally, so they can only go back the past 3 years, generally speaking. So you're not going to take too huge of a hit unless you were like, for these 3 years, I'm going to do the worst tax things possible and then never do it again. That's tough luck.
Well, it is. And as far as the audit goes, like let's say you're using a CPA or a tax attorney or both, and you're doing some things that are maybe like a little more gray area that the IRS looks at and decides, oh, these are not, actually legal or whatever. If you're going through a CPA or a tax attorney, do you have any protection as the individual who's hired these professionals, or are you just as on the hook as they are?
Generally, I think it's going to be your money regardless. Like, so even like if you weren't at fault for underreporting your taxes, like you still underreported your taxes, so you're still going to owe that money or whatever. Like the penalties and interest, to be honest, I'm not like quite sure how they divvy that out between, your professionals and yourself on that basis. But if you have a good tax attorney, like generally they'll, kind of stay in front of you, like for the audit, like potentially represent you through the audit, and hopefully like be able to defend your whatever position you took to the IRS and say, hey, well, like under the tax code, we did, et cetera, et cetera, et cetera. But generally that's not how it's done, but this is why we believe it's, correctly done, and maybe it'll work, maybe it won't. But yeah, so I would, if you are ever audited, I would consult the tax attorney.
But the tax attorney would be liable in their own way as well. So it's not like you're just going to get somebody who's like, well, that's probably not legal, but hey, it's on you, so we'll just do it. So you're going to get.
Yeah, generally there's accountability there for the attorneys that are advising you.
Yeah, I mean, because I've heard of some of these, like they sound like mafia type attorneys who are just like, yeah, we can do that. It's like, maybe I'll find someone else.
Yeah, there are certainly some attorneys that are willing to take more risks than others. And I know like there's certain people that'll stop for attorneys that'll take more risks. Like I knew somebody who had reached out to a buddy of mine who was an accountant, and he was like, hey, like can you do my personal tax returns? And he looked through and he was deducting, like we were talking about before, just deducting all of these like wacky charges, like family trip to the Cayman Islands. And my buddy was like, yeah, I can do them, but we're not going to be deducting these. And so then he basically told my buddy, no, I don't want to hire you as my CPA because you won't deduct these weird charges. So there are people definitely that are shopping for less than above board, CPAs and attorneys. So definitely something to be careful of.
That kind of just answered what my next question was. I was going to ask, like, what are some of the most common things that you see that people do that are kind of gray, but in your eyes, you're like, definitely no, this is not gray. This is a no.
Yeah, family trip to the Cayman Islands, deducting that would be for sure. Yeah, like in my job, like I see a lot of like S corporations and partnerships, and they, generally it's like a family-owned business or something like that, and they'll run a lot of their personal expenses through. Like, I saw engagement ring, jewelry, vacations, his wife's cell phone bill. Just deducting things you shouldn't be deducting, I think, is one of the number one things that I see. Another thing is like if you have like a family business like that or an LLC. I've heard somebody say like you should put your kids on payroll. Don't do that. Like if they're not doing anything for your business.
What if they're recording Instagram videos for you?
If they're part of your income generation?
There you go. Like if they have a real job at your whatever your LLC or your company is, and if you want to designate them as a social media marketer, sure. And if you can point and say, hey, we used all these Instagram videos that she shot, then sure. But we had. Like I couldn't tell you how many times I've seen just like guys will have their wives or their kids on payroll and we're like, hey, are they working for the company? And they're like, oh no, we just pay them a salary so we can deduct that off the business taxes.
So you at least have to have a good story.
Yeah, or at least make up a position for him to do something.
On that topic, I mean, I think we're going to talk a little bit about real estate professional status. And one of the things that we've heard regarding real estate professional status is that you have to have some paper trail or some evidence and documentation of the actual work that whoever is said real estate professional is doing in the business. Would it be the same thing with a kid? Like, should you be, documenting like they did this amount of hours this day filming content for me, or they did this? And then what are the requirements? Is it like an hourly requirement that they have to be doing in order to qualify that as a child employee? And are there labor laws related to that?
There definitely are labor laws related to it. That's way outside my wheelhouse as a former victim of child labor.
Yeah.
But yeah, so I don't think
his family owns a farm. We'll just clarify that a little bit.
No, I don't think you have to get that detailed in like documenting like what they do like every hour, but just having like a general like being able to point to like stuff that they've kind of done, or the function they perform for your business, and being able to say that that's actually helping our business, versus like, oh yeah, we made little Timmy our director of operations, and all he does is sit in his room and play video games. Like, that's a little harder to justify paying little Timmy all that money and deducting it off the corporate tax return.
Yeah, so there's a lot of pretty popular Instagram people that talk about all the stuff that you're talking about right now, and they make it seem super glamorous and like, oh, you're going to save so much money and all that. Maybe
you'll
not.
save
Maybe
money if you're not audited.
Not just the Instagram famous people.
Yeah, generally, I advise against putting people on payroll who aren't doing anything.
Yeah.
So what is the is there an hourly requirement for somebody to be on payroll, or is there a maximum annual that you can pay, like a child, for example?
To be honest, I don't know, but generally, like, you look to like more than 50% of time devoted to the business, and again, that varies. Like, if you're paying your kid, I don't know, 10,000 a year to run your social media, like, that's probably not, and you're making like $1 million a year, that's probably not terrible. But if you're making like 20,000 a year and you're paying your kid 10,000 a year to run your social media, I think that's a little bit like it's proportional, kind of like there's not, I guess I would say, like, you don't know it till you see it, but when you see it, you know what it is, if that makes sense. Right. Like, there's no like hard and fast rule on it, but it's kind of like, this looks weird, so let's take a little bit closer look at it.
Yeah. So you just would not be able to defend one of those positions, but one of them you'd be able to, it sounds like.
Right, exactly. Like, just kind of like the reasonable, like, we use this, like, it's like my least favorite word in the world, but the reasonable person that comes up in law all the time. And it's like, a reasonable person would like see that and think, oh, like, that's fine, versus like, why are you paying your 10-year-old $10,000 a year to do nothing? It's just kind of like, does this look reasonable? Can I defend it? Kind of deal.
So if my daughter works out in the gym with me, I can't write off the expense of her being my personal trainer, and she's 4.
Probably not. But
she's a hard.
She hypes me up.
She would make you.
You could give that a try, but maybe also don't deduct your personal trainer.
Oh, you can't deduct your personal trainer.
Maybe outside of being in the NFL, I'm not sure.
What if I'm not even an influencer? Never mind. I can't do it.
I have to be able to like stand for certain amounts of time. So I feel like I need to be trained to do that.
I know, sitting here at this microphone, I got to keep my posture and all that.
Yeah, there you go. Josh, you could expense a golf coach.
There you go.
That sounds good. All right. I've already done that. That's
okay. Perfect.
I might need
Maybe
you
don't tell me
at
that.
some point.
Don't tell me that.
That's good.
I think another big thing, and this is kind of something that that Jen and I came across when we again moved up here to Northern California. We had both been, so we started an LLC, which was Davis & Co. We were managing an apartment building in Los Angeles before the building we lived in, and then we were managing our real estate portfolio that we own as a company. So all of our income was coming into this Davis & Co. LLC account. But then when we moved up here, we both took full-time nursing jobs. And so we're depositing all of our W-2 income into that same Davis & Co. account, mostly because we were trying to maintain the like income history for the business in case we ever wanted to buy something or use it, because you need the 2 years or whatever if you're looking for any kind of loans. But then in talking to the CPA, it sounded like that's kind of separate. Like that W-2 income needs to be run through your personal, whereas like 1099 can go through the LLC like that. Can you kind of talk about the difference between the W-2 and the 1099, and then like as far as what you can claim and everything?
Yeah. So your W-2, your full-time employment, you receive that from a company generally, versus a 1099, you're an independent contractor. So you're kind of like self-employed, and that company's paying you in your capacity as being self-employed versus them employing you. And so with W-2, like there's not going to be a lot of stuff you can deduct in terms of income taxes from your W-2, like in terms of like business expenses, because the company is already paying for pretty much all your business expenses, right? The company's bearing the tax burden of providing you paying for the lights to be on, paying for your equipment generally, stuff like that. Versus like 1099, I'm not sure how it is for you guys, but I know a lot of 1099 contractors, like they have to bring their own equipment, like they have to have a home office or something like that. And so like as a 1099, like generally a lot more of your expenses are deductible because it's your business. Like like your business is your income.
Is there anything you can deduct as a W-2?
In terms of business expenses, not really. Like on your W-2, no, but like there's obviously personal stuff you can deduct. Like if you want to go and itemize your deductions like that, like on your 1040. We're getting like real technical here with the forms, but yeah, in terms of like business as it relates to your business, like Josh, like if you were a W-2 at the hospital, like you could deduct like your home office or your, I don't know, are you deducting your travel like to and from?
No. Well, I do a lot of 1099 work, so I will for that.
Okay, yeah.
But
and so
when I do W-2.
So when you do W-2, like you couldn't deduct all that stuff, and 1099 you can. And so it's kind of like you can weigh the pros and cons of it. W-2, like you can have access to like their health insurance and stuff like that, but you don't have as much freedom. You don't have as much, flexibility with, taking advantage of certain things like for deducting for your taxes. Like you might still need a home office being W-2, but you're kind of out of luck because you can't deduct it. So, it's something you have to weigh the pros and cons of. And I think there's generally just more flexibility being a 1099 in terms of, what you can do with your taxes. I think one other thing to think about in terms of like health insurance, and taxes is, a health savings account, HSA. If you're a W-2 employee and your employer offers one, like definitely take advantage of it because it's, it's triple tax advantage. Tax deductible, what you put in, it's not taxed when it comes out. The growth isn't taxed either. So, you put your money in this health savings account, you can invest it in pretty much whatever you want. And then as you have medical expenses, you can take money out and you're not paying taxes when it goes in, you're not paying taxes when it goes out, and you're not paying taxes on as much as it grew in there. I think a lot of people get, scared by an HSA because nobody knows how to use it, myself included. It's definitely something to take advantage of because it's free money that you're not paying taxes on.
Can you invest in an HSA?
Oh yeah, you can invest that money like in your HSA. You can put that into, you can invest it into whatever you want for it to grow. And then I think it's either 60 or 65. Once you're reached that age, like you can take it out and use it for whatever. Like it's not restricted at that point, and it rolls over every year. So it like you don't have to use it all up if you didn't go to the hospital all that year. So that's
keeps growing
big,
forever.
Yeah, exactly. Big proponent of the HSA.
All right, so I think we're going to jump to our final 5. We're going to throw a few more questions at you here.
Oh, perfect.
All right,
We'll have to modify these a bit.
This one's financial, like, I don't know what I'm trying to say. I'll just read it. How about that?
Just read it.
All right, what's a top financial resource that you found? Like, if you're looking for something, where do you go to educate yourself?
For finances, definitely all of my accounting friends. I was friends with a lot of accounting majors in college, so those I reached out to them. But like just online, I think this is like super basic, but Investopedia honestly is really helpful. I'm not going to say use it as your Bible, but like it generally gives like a pretty good overview of financial concepts, and then it'll point you in directions to dig further on them if there's more stuff you want to learn about it.
What advice would you give your younger self? I guess in this case, I would apply it to, like as far as like investing or setting yourself up for retirement or whatever.
Advice to my younger self would have been to buy all the stocks I talked about buying during COVID. That was, looking back on it, I was like, wow, I could have made so much money. But just in general, I think just starting investing at like a young age, I think it's never too soon. And this goes, even for people that have kids, getting them an account with a high yield savings or something like generally safe where it's not going to be super volatile, but just having that like early exposure to investing and, being able to watch your money grow and kind of just, getting a knack for it, I think is key. So yeah, I think just starting as early as you can.
Oh. So in addition to paying them $50,000 to $60,000 a year, just get them an account.
Exactly. Yeah.
As soon as possible.
Exactly.
Prefer taking a few pictures every month.
Yeah. Okay.
Nice.
Noted.
Okay. All right. What excites you about the next 12 months? Any new things going on?
Moving to California probably in the summer.
There you go.
No, that's not it.
What
else?
Okay, it's not that exciting. Yeah, so I am a part of an accounting firm, new business growing, so that's exciting. So hoping to see that grow.
Oh, nice. Where you just do tax advice, or what's the business?
We do income taxes, we do bookkeeping, just general accounting and tax services. So as
is it
tax
just
attorney,
you, or?
No, I have my accounting friend. He's the CPA on board, and he's handling all the tax preparation and bookkeeping. So he's a quality accountant. So shameless plug for that. DNA accounting.
Does he do any real estate?
He does. He has a real estate portfolio, and so he's very familiar with the real estate taxes, and he's very good.
We'll have to
good guy
talk
too
after the podcast.
Nice. Yeah, we'll be talking.
Yeah. The fourth question is, how do you define success?
Man, that's a tough one. I think it's subjective. I think every person's definition of success is different, which is why you asked me that question. But I think it's, achieving the goals you set out to achieve, and you're not going to achieve every goal that you set out to achieve. I think that's just the reality of life. But just knowing that, like, I think you gave, everything you could to achieve the goals that you wanted to, and, being at a point where you're satisfied or, you feel good about. But yeah, I think just achieving the goals that you set out to achieve and being happy with the way you did it.
I think that's solid.
That was eloquent.
Yeah,
Eloquent.
you can cut out those 30 seconds in there where I rambled. But
no, that's good. That one might stay in.
Let's not cut out the part where
we'll
Josh
let you know.
Eloquent.
Yeah, keep that in there.
That'll take it'll distract everybody from what you said.
Put that as the real.
No, that was a good one. All right. And last one is, what's the biggest financial mistake you've made? What'd you learn from it?
Biggest financial mistake I made when I was looking for an internship in Chicago. I went to sublet an apartment, and I didn't properly vet who I was subletting that apartment from, and I lost $2,500 in a deposit on an apartment that didn't exist. So that was
it this prince from Nigeria?
No, but
I know that used to be a big scam.
Yeah, I should have definitely looked more into it. But she sent me a legit lease agreement, and I thought, wow, this is. She actually got one of my buddies I was interning with as well, separately, like completely independently. We had no idea. And then, so we got to work, and I was like, what happened to your lease? And he was like, oh, I got scammed by this lady. And I was like, is it this lady? And it was the same lady. She made a killing off of us that summer. So if you're out there, I hope you're living well. No, it was a different apartment building too. So she's got multiple fake apartments.
Now that's the real estate investing. That's how you invest with no money down.
Exactly. You're not subject to any real estate requirements because you have no real estate. So America's finest lawyers being taken for a ride. Yeah. But so I guess what I learned from that was to always, vet what you're investing in, or even paying for, renting, whatever it is. Just make sure it's a safe place to put your money.
Now, did you hire yourself a tax attorney to help you get that money back?
I filed a police report, and they said good luck. So,
jeez.
Well, and I think the biggest you'll have a new financial mistake once you move out here to California. Just the move. your security deposit alone will be well more than that. So, best of luck to you. But
thank you.
You're making the right choice, though. Don't listen to Josh.
I think so too.
Yeah,
as long as you come out here to golf a few times.
Oh, absolutely.
Yeah, and you won't be far from me. So when Josh comes out here, we can have a business meeting with our real estate or tax attorney.
There we go.
Some golf. So
there we go, and I might deduct that off my taxes if you guys are going to deduct off yours. So
yeah, that's perfect. Awesome. Are you on any kind of social media?
Yeah, I'm on Instagram. What's my handle? @sbruntz_.
And if people are looking for tax advice or anything like that, is that the best place for people to get a hold of you, or would there be another way? Yeah,
they can do that, or they can reach out to DNA Accounting, which I'm blanking on the email address for. I believe it's dnaaccounting@gmail.com.
All right. And that's the new company.
Yeah, that's right. Derek and I, who's my buddy, the CPA, will get your emails and see what we can do. Also, if you need your tax returns done, he's the man. So
Right on.
We'll put that in the show notes too. Once we figure out what it
perfect.
really is.
Yeah. Well, hey, thank you.
Sounds good. Yeah.
Yeah, thanks for having me, guys. This was a blast.
Well, hey, thank you.
Sounds good. Yeah.
Yeah, thanks for having me, guys. This was a blast.